Hello, my friends. I think we all at some point in our life wonder how we can earn money without putting in a lot of effort. Well, that's where passive income comes in. In today's video, I'm so excited to share with you top 5 proven methods that can help you establish passive income streams, enabling you to work smarter, not harder, especially if you're a busy professional. I will also be analyzing the pros and cons of each method, providing details about what I have done, my preferences, and my future plan for generating passive income. By the end of this video, you will be equipped to identify the path that suits you best. For those friends who we haven't met before, my name is Charlene. I'm a CFA charter holder with a decade of experience in finance across Asia and Europe, including working in some big financial firms like JP Morgan, simplifying finance and empowering everyday people to work towards financial freedom is my true passion. Okay, let's get started. What is passive income? Passive income, passive, the opposite of active, means that you don't need to put in a significant time and effort. You can just lay back, money just comes in. Income refers to the money that you receive on a regular basis. If suddenly you receive a big amount of money and then it stops, it's not called income. Regular cash coming in when you sleep, that's passive income. It sounds so good, too good to be true, right? Without further ado, let's dive into the 5 lucrative passive income ideas every professional should know. Whenever we talk about passive income, property investment often comes up as the first option. Buy a house or apartment and rent it out. Every month, the living in a house pays you rent. I don't think we need more explanations here. It's really straightforward. Around me, I've got 2 close friends. They've been semi-retired for the past 3 years, living off the income generated from their properties. They started building their property portfolios in Asia, Europe, and Middle East early on, of course with some assistance from their families. But there's the catch. Not all properties are created equal. If you want a relatively high income from your property, you want one with a good price to rent ratio. In general, a price to rent ratio of 15 or less means it's better to buy than rent. So the less the ratio, the better it is for you as a property buyer than renter. And apart from price to rent ratio, there are a lot more factors to take care of. Things like location, the region's economic growth, population, immigration, interest rates, financing rates, tax, insurance, and ongoing maintenance expenses. Plus, diversification is key too, as you don't want all your investment concentrated in one place, whether that's in Zurich, Hong Kong, Thailand, US, Tokyo, anywhere. Instead, you may want to spread them out across different locations and segments to lower the risks. Now, here's the part that might drive you a little bit crazy. If you do all the research and put in the work, it's no longer truly passive income. If you're aiming for more hands-off passive income, there's another choice to explore. Now let's talk about REITs or real estate investment trust. A lot of us may consider property investment a substantial commitment, saying, I don't even own a house by myself, how can I buy one and then rent it out? The upfront investment can be big. There's also so much to worry about, as I just mentioned, such as location, economic growth, population, immigration, interest rates, and so on. I'm a busy professional. I work at least 9 to 5 or 9 to 6. I don't have time to take care of all those things. I don't have time to take care of tenants as well. However, I still like the idea of owning property because it feels real. Well, that's where REITs or real estate investment trusts come in. What is a REIT? A REIT is like a special club where lots of people put their money together to buy buildings like apartments, hotels, shopping malls. When you join this club by investing your money, you become a small owner of these buildings. The money that comes from renting out these buildings will be shared among all the club members, including you. It's the way for regular people to invest in real estate without having to buy a whole building or a whole house or a whole apartment. These property professionals handle the management of the REITs on your behalf, leaving you with the simple tasks of waiting to receive rental income. If the property price go up, you will also earn the price appreciation part as well. Again, it sounds too good to be true, right? Without you doing anything, you just collect the money. However, the downside of being a REIT investor include 1. Lack of control. Since you don't directly own the properties, you have no say in management decisions and you cannot choose your tenants. 2. Stock market influence. It's a little bit technical. In general, REIT can be influenced by the stock market, which doesn't always reflect the true value of the properties they own. In most simple terms, when stock go down, REIT market probably go down as well. 3. Tax. In some countries, purchasing property with a loan may offer tax advantages, while investing in REITs can lead to dividend taxes in certain regions or countries. So again, be prepared. The next passive idea you should know is investing in stocks that pay regular dividends. Dividend stocks are like shares of companies that distribute a portion of their profits to shareholders in the form of dividends. By investing in those companies, you can earn a steady stream of income on your investments. Put in simple words, imagine you own a little piece of a company by buying a special type of company ownership called a stock. Now, when that company makes a good amount of money, they decide to share some of the money with their stockholders, who are the people who own their stocks. This extra money that they share with you is called dividend. So dividend stocks are like owning a part of the company that pays you some of their profits as a thank you for being their owner. It's like getting a little gift of money from a company whenever they do well. Living in Switzerland, I've come across some companies that express their gratitude or reward shareholders differently. For example, in a country famous for its chocolates, some of my friends have received boxes of chocolates from the companies in the chocolate business as dividend. However, it's crucial to remain aware of the potential risks and downside associated with dividend stocks. 1. Well, they offer regular payoffs. Some companies focus on paying dividends may not allocate sufficient funds to grow and expand their businesses. Instead, they distribute most of their earnings to investors, which can head to slower growth and ultimately lower stock price. 2. Additionally, if a company encounters financial difficulties, they may reduce or entirely stop dividend payments, affecting your passive income. 3. Lastly, similar to what I mentioned about REITs, in some countries, dividend income may be subject to tax, which can impact the amount you ultimately receive. To be really honest, personally, I'm not a big fan of dividend stocks. Everyone has different financial goals, right? Rather than seeking regular cash flow, I prefer to reinvest the dividend back into the business. After all, the total return is what truly matters to me. Another way to make money without actively working every day is by creating online course. It can work especially well for those professionals. If you know a lot about something like a skill or a subject, you can turn that knowledge into a course and sell it online. There are websites like Udemy, Teachable that help you do it easily. Once your course is ready, people from all over the world can pay to take it. You make money each time someone enrolls in your course. To put things into perspective, according to a report, the global online paid knowledge market currently stands at estimated USD 3.6 billion, projected to reach USD 16.9 billion by 2028, with a CAGR rate of 29%. You might think that only experts or professors can teach courses, but that's not true. Sometimes regular people like us can connect better with potential students because we'll face similar challenges. It will be a lot easier to relate. For example, if you're a millennial like me living in Europe, wanting to learn finance and investments, you might find it easier to relate to my experience and advice compared to a famous investor like Warren Buffett. We're navigating modern financial landscapes together, we're addressing issues like buying our first property together, and we're trying to break free from the 9-to-5 job together. In my perspective, everyone, especially professionals, can identify a specialized niche. For instance, I know a software engineer friend who just created an AI-related course and sold it to 3,000 students on an online course. He didn't even show his face in the course. In the end, he could sit back and relax while earning income whenever a student enrolled in his course. I also see some course online teaching us how to master your salary negotiation skills, how to play hard in a relationship, and how to seduce your crush. I'm not joking, go search online, it will surprise you. Find your niche, deliver engaging content, and effectively market your course. It can be a great way to earn passive income, but keep in mind that it takes some time and effort to set up your course at the very beginning and attract students effectively. The next passive income idea is to start by building a dedicated following on social media platforms such as YouTube, Instagram. Create content that aligns with your niche, and when you accumulate a certain number of followers, you can consider incorporating methods like affiliate marketing, sponsor posts, or selling digital products relevant to your audience. These income streams can continue to earn money passively as your content remains accessible. However, it's essential to remember that social media, including platforms like YouTube, requires a long-term commitment. Building trust and connections takes time, and trust can be broken quickly. This is exactly what I believe in and what I aspire to achieve. As you may know, it's usually a great upfront investment. Investment here, I mean a lot of time and effort and a lot of frustration and even depression before it gains momentum. But once it gains momentum, it usually grows exponentially. Just wanted to share some personal thoughts. Before launching my YouTube channel, I asked myself 3 key questions. What do I enjoy doing? 2, what am I skilled at? 3, in which area can I make a positive impact in the society? This led me to the idea of starting a YouTube channel. Why? First, I enjoy talking and connecting with others, and I'm quite an extrovert. It's something I like. Second, I excel in writing and public speaking, and I have a strong foundation in finance. Third, I've spent a decade in the finance industry, particularly in private banking. I started as a banking journalist in Hong Kong, investigating how multimillionaires invest. And after that, I joined JP Morgan, serving private bank clients. Later, I joined a wealth tech firm situated right in the Global Wealth Center, Switzerland. My job was all about making the rich even richer, and I increasingly felt in my gut, it's time for a change. That's why I started this channel with the mission to empower everyday people to work towards financial freedom. So I believe I can make a positive impact. It's a meaningful purpose for me, and social media like YouTube provides the perfect platform for me to address all 3 aspects that I just mentioned. This video marks my 7th video publication, and my plan is to release at least 1 video every week for a year, regardless of the number of followers and viewers. And I really sincerely wanted to invite you to join me on this journey by subscribing to my channel to see how I start, how I fail, and how I learn and how I improve. Before I wrap up, I wanted to leave you with this thought. Passive income is about achieving financial freedom while working smarter, not harder. Whether you choose property, raise, dividend stocks, online course, or social media, remember that each journey is unique. For many of them, while it may take time and effort upfront, the potential for long-term passive income is well worth the investment. As we wrap up, I highly recommend you to watch my previous video, How Did I Achieve 6 Digits in My Mid-20s? In that video, I share my personal journey and the strategies that led to my little financial achievement in my mid-20s. If you haven't already seen it, I encourage you to check it out. It offers insights into how these strategies that apply to me personally. Thank you for joining me today. If you found this video valuable, please take a moment to give a thumbs up, subscribe, and hit the notification bell so you won't miss any of my future content. Share your thoughts and own passive income journey in the comments. I will make sure to reply to you. Until next time, see you soon!